But let's focus on earnings. And Essar Oil is a mid-cap company that's doing pretty well. That stock is still holding on to gains of 13% or so after it came out with a strong set of earnings. We spoke with the management at Essar Oil, and we spoke to Mr. Suresh Jain, Chief Financial Officer at Essar Oil, and we asked him about the fourth quarter. The performance was exceptionally strong. So we asked him what led to this.
Yeah, before coming to the quarterly performance for the January to March, let me tell you that this is the first full financial year of operations of our expanded refinery, wherein we have touched a turnover of 1,07,190 crores. We have reported a EBITDA of 4,703 crores, up by 29% compared to last financial year. A profit of 126 crores compared to a loss of 1180 crores in the previous financial year. The current price GRM for the full year is 7.98. This improved financial performance is mainly due to strong operating performance, higher gross refinery margin, especially during the last quarter, that is January, February, March, and appreciation of rupee against the dollar. Coming to the quarterly performance, yes, our EBITDA for the quarter is 2,053, up 32%, and our profit was 1,008 crores compared to 2,000 crores in the corresponding previous quarter. This strong financial performance is mainly due to higher current price GRM, which is $10.12 a barrel, positive M2M on Forex, lower operating expenses, and lower interest charges.
Is the strength in the GRMs likely to remain going ahead?
You see, we do not give any guidance on the future, but as we all are aware that there is a volatility in the gross refining margins, which is mainly due to margins on the products and the oil prices. If you see our current price GRM in the first and second quarter, this was around $7 a barrel. In the third quarter, which is October, November and December, our current price GRM was $8. And in the current quarter, it is $10.12. So on an average, our GRM for the full year was 7.98. What we feel generally is that a complex refinery like us provides a premium of $7 to $8 over IEA Singapore benchmark as per the old methodology, and recently they come out with a new methodology, and as per the new IEA Singapore benchmark, our complex refinery like us should give a GRM of around $4 above IEA. So our margins are mostly dependent on the cracks and the oil prices.
Let's talk about your domestic sales now, which have increased during this particular quarter. What's the outlook for that? Do you expect the momentum to continue?
Yes, you are right. If you see the current quarter, our domestic sales have increased, and in terms of quantity, it has moved to 68% compared to 57%. But if you see the corresponding last quarter, our domestic sales was lower because of the extended monsoon, and we have to export the gas oil, which we generally consume in the domestic market. So in this current quarter, we have been able to capture our domestic sales. Overall, if you see for the full financial year, in terms of our quantity, our domestic sales are marginally lower compared to the last financial year.
Your interest cost did fall in the quarter, but your debt still remains on a higher side. Any timeline, any kind of a target that you have in mind to reduce the debt, and are you planning to raise more funds?
Yeah, I will first take your last question. As far as the dollarization is concerned, the company has stated policy whereby we have the RBI approval of conversion of our rupee loan up to 2.27 billion US dollar, and till last financial year we have been able to achieve about $1 billion, and we are continuing to pursue our dollarization plan. The impact of reduction in interest is partly due to this dollarization coupled with the repayment of loans which we have made during the quarter.
All right, so that was Mr. Suresh talking about the earnings of Essar Oil. Keeping with the earnings, Indorama also came out with their earnings.